Industries maintained healthy growth momentum in its Q3 results. Export Custom Synthesis Manufacturing or CSM business saw 19% YOY growth. Domestic revenues grew 8% led by a favorable Rabi season. Gross margins were impacted by lower export incentives and increase in the raw material prices. Rise in overhead expenses, mainly due to increase in fuel expenses, shipping costs, and one-time strategic initiatives, led to further decline in the EBITDA margins. However, what caught our attention is the diversification and backward integration plans of the company. PI Industries is looking to expand its export CSM business by venturing into adjacent segments. The company expects to enter into the pharma intermediates. To scale up the pharma business, the company is looking at inorganic opportunities, approaching customers, and leveraging strengths of the agrochemical business. The company has surplus cash and is aiming to finalize an acquisition within the next 2 quarters. Apart from pharma, it is also looking at manufacturing electronic chemicals. PI Industries is working with players having proprietary products and expects to scale up the business over the next 3 to 5 years. The company expects to derive about 15 to 20% of the CSM business revenues from the non-agrochemical space. PI Industries will also introduce the flow chemistry process of operations in certain stages of manufacturing. The move is aimed at reducing the cost, improving the overall capital efficiency, and enhancing cost competitiveness. The company's flow chemistry process is at a pilot stage as of now and will align with more projects going forward. Efficient operations will create value for the current customers as well as help in getting new customers. The company commercialized 4 new molecules in 9 months of the FY22 period, and 3 more are expected to be commercialized in Q4 FY22. It acquired 8 new customers during the 9-month FY22 period and has a strong order book of $1.4 billion. This provides healthy growth visibility. PI Industries stated that more than 40 products are at different stages of scale-up and expects robust double-digit growth to sustain in this segment. The company launched 3 specialty products in the domestic market, 1 insecticide for rice and 2 fungicides. It also launched 12 new products in the horticulture segment, which are expected to boost revenues. Furthermore, PI Industries has a strong pipeline of 15 to 18 products which are at different stages of development and registration. Recent innovative launches, Orkira, PB Knot, and Armatura have received strong response and are scaling up. With prospects of a normal monsoon, we expect the domestic revenue growth to be healthy in FY23. The company commissioned a multi-product plant or MPP in Q3 FY22 and would ramp up its operations. In the wake of the strong demand, the company stated that it would set up a base for another MPP plant in FY23. It has also set up a building block for monomethylhydrazine or MMH, which is a key intermediate used in the manufacturing. Apart from cost savings, the company wants to secure supplies as currently MMH is sourced from China. PI Industries would incur capex of 300 to 350 crore rupees in FY22, out of which 70 crore rupees would be on MMH, and the balance would be for capacity expansion and the maintenance capex. The company has undertaken partial price hikes in Q3, the effect of which would be visible in Q4 FY22. It indicated that it would undertake further price hikes in Q4 FY22 to offset increased input prices. At CMP, the stock is trading at PE of 41 times its FY23 projected earnings. The stock has declined by 12% in the past 3 months and underperformed the benchmark Nifty, which dipped by 4% in the same time period. As per the management, the global export custom synthesis market of early molecule stage, which is the area of PI Industries' expertise, has a market size of $6 to $8 billion currently. Out of this, the company's market share is 7 to 10%. Apart from traditional agrochem business, PI Industries is getting inquiries for non-agchem molecules which provide a good growth opportunity. Given the strong growth potential, we advise investors to accumulate the stock on decline.